Thank you, Julian, for that introduction. That's great. And thank you all for coming tonight. Really appreciate it. And also thanks to the people who are tuning in from overseas. Thank you for attending. My name is Robbert de Weijer. As Julian was saying, I spent a lot of time working for Shell International, living and working in 10 different countries. My last assignment in Shell was a secondment to Armour Energy, which then got sold to PetroChina and Shell, allowed me to stay in the country, and I joined Armour Energy in July this year. So Armour Energy is a oil and gas exploration company. We got listed in April 2012. We've got 300 million shares on issue. We've got a market cap of about $70 million at the moment, with just under $20 million of cash in the bank. So that leaves an enterprise value of just under $50 million. Now, our board is very experienced. 3 of the guys are actually ex-Armour Energy, so they were either directors or senior managers with Armour Energy. And they're also, they have a very strong track record, and these guys just can't help themselves, and they want to do the exact same thing again with Armour Energy. So we've got a small team. It's only 13 permanent full-time employees. We try to get our overheads down as much as possible and put the money in the ground rather than keeping the lights on in Brisbane. It's a strong technical team. There's 3 or 4 of the guys are North American, so they have lived through the shale gas experience in the States. And given the acreage that we own, that comes in very useful. So I'm really looking forward to sharing the results that we've achieved so far. So we've got a very large acreage position in the northern part of the country. It's a total of 133,000 square kilometers of proven petroleum systems. Companies were drilling here 20, 30 years ago, and they found oil and gas. However, at that point, gas prices were low, the gas demand wasn't there, and it was all prior to the shale revolution. And today couldn't be more different, where there's increasing demand, in fact a shortage projected for Eastern Australia. Gas prices are trending towards LNG netback, and obviously the shale revolution has occurred in the States with all the learnings that have come from it. We also have a tenement or an interest in lake soil in Victoria, and that's where we expect to see our first cash flow coming from. We're planning to drill a well there early next year, with our first cash flow coming in shortly after the middle of 2014. So that's going to be a good milestone to go for. Our tenements in Northern Australia, obviously they are remote. I mean, it's a very remote part of the country, but we always say they're certainly not stranded. You know, we've got a pipeline going through our Northern Territory tenement, and our Queensland tenement is just 300 kilometers north of Mount Isa, a major industrial hub. So, in fact, when you think about it, so by the time we build the pipeline from our Queensland tenement into Mount Isa, we're effectively connected to the east coast of Australia, all the way to New South Wales, Gladstone, and other markets on the east coast of Australia, as you can see on the slide there. Our acreage position is, it's larger than some of the Eagle Ford and the Barnett Shale in the States. And given the fact that they're proven petroleum systems, for us it's all about identifying the sweet spots. And that's what we've been busy with for the last couple of years. So what you see here is more of a close-up look of our tenements. The yellow tenements have been granted, so we've got 7 tenements granted in Northern Australia, and the blue ones are still to be granted. We've got native title agreements in place, land access agreements, so all the approvals are in place for us to get on with the work. We've got very good relationships with the traditional owners. That's absolutely key, working in that area, and those guys are pro-development. They're looking for us to create jobs for them. They're looking for a revenue stream, and they want to be part of our future success. So really encouraged by the fact that we've got such good relationships. In terms of our resources, we had a discovery in the Northern Territory last year, and that has allowed us to book the first contingent resources, as you can see in that overview there. Now, in total, that area, Northern Territory and Queensland, we believe there's 60 TCF of recoverable gas, plus a large amount of liquids as well. Now, 1 TCF is the equivalent amount of energy that 1 million people would need for 20 years. Yeah, so we've got 60 TCF. And even if you say that we'd only ultimately produce 10 or 15% of that, let's say somewhere between 6 and 10 TCF, that's still more than enough to provide gas to a number of LNG trains. So it just gives you the feel of how big this could be, as we carry on exploring and appraising these tenements here. It could be very large indeed. I made a point around the fact that the tenements are remote but not stranded, and what you can see on this slide here is the infrastructure effectively in white. It may be a little bit hard to see. You can see all the roads, so the road infrastructure system, but just as importantly, there's a railway going from Townsville into Mount Isa, and by the time we go into major development, it's going to be very handy to get all the proppants, all the piping and the casing, etc., that we need, and we can transport it by train from Townsville straight into the area. So a major advantage to have that railway available. We've got a heads of agreement with the APA group. Many of you will probably be familiar with the APA group. And that's all about a number of pipelines that we intend to build in future. The first pipe, and that's depicted by the blue lines in the diagram. The first pipeline that would go in would be the pipeline from our Queensland tenement into Mount Isa. That's the 300-kilometer pipeline, and that would then connect us to the east coast of Australia. In terms of how do we monetize and commercialize the assets, we see a number of stages. Where we operate, there are a number of local mines that need a lot of energy. So relatively little infrastructure required to start providing gas to those entities. And then the next step could be supplying gas to the Mount Isa market, which is a significant market of about 40 PJs per annum. And then subsequently, you could think about starting to reverse the flow from the Ballera to Mount Isa pipeline. And then you could actually get into New South Wales and into other parts of Queensland, including Gladstone. So a number of stages around monetization, and very similar to Arrow. We'll start out relatively small, but then build up to something that's much bigger over the coming years. A lot of people talk about the Cooper Basin, and I think for very good reasons. I'd like to think that our acreage is just as attractive, if not more attractive. The quality of our gas, for example, is very close to pipeline spec. So we don't need to worry about CO2 in the gas, and therefore we don't need to process the CO2. So that's a major plus. And the depth of where we drill is somewhere between 1,500 and 3,000 meters. Some of the other areas, for example, the Cooper Basin, the shales start at 3,500 meters. Now, that has a major impact on the cost of drilling wells. It could be a factor of 2 or 3 in there that we can be more cost effective than some of our counterparts in the Cooper Basin. So, it's early days, it's frontier exploration, but a number of wells have been drilled. We've drilled 9 wells so far, and 7 of those have been successful. So that's a very high success rate for an exploration company at this stage. So we're very encouraged by what we've seen so far. I'll now go into a little bit more detail about each of the areas, both in Queensland and the Northern Territory and Victoria, and then I'll wrap it up with some more market information. So on Queensland, we're targeting 40 TCF of prospective resource, effectively gas that we can believe can be extracted. One tenement has been granted. As I said, all approvals and permits are in place. And basically we're chasing what we call a stacked play. So that means that there are multiple layers, conventional and unconventional gas, where we can extract gas from. In this particular case, there's the Lon Shale that we believe contains 22.5 TCF of prospective gas. Underneath that, and that's actually much bigger than the Lon Shale, is the Riversley Formation. And we've come up with an early internal estimate of 18 TCF, but that number could be much higher based on what we've learned this year. And then there's a conventional resource play, a bit more shallow, that also has close to 2 TCF of gas in it. So, it's an enormous amount of gas. And as I said, if we only manage to extract 10 or 15%, that's still a very large quantity of gas. So that, in combination with the excellent gas quality that we've seen, the proximity to Mount Isa and infrastructure, and then the low social impact, I think it really puts us in great shape to take this company forward and create value. This is what it looks like out there. There's about 2,000 people that live there. There's places like Burketown and Doomadgee, very small towns. There aren't many gates to lock, and what you see there is actually the site of one of the wells that we drilled. You see some of the roads that go through the area. So it's a very large area and very well suited for a major development with very low social impact. I don't want to get too technical, but this is one of our successes this year. It's a well called AJQ 2, and what we drilled was a vertical well first, and that was followed by a horizontal sidetrack. So you can see that there. So we were targeting the Lon Shale, and we hydraulically fractured that well. So we saw, you can see from that photo, that some of the gas that we were getting at about a depth of about 1,000 meters. So a very significant flare, and that's just whilst we were drilling. Now this is actually a first for Australia. So we managed to flow gas to surface from the fracked zone that you can see there. It was a very small volume, which is related to the fact that we're still backflowing a lot of the liquids that we pumped into the ground as part of the hydraulic fracturing process. So because it's the wet season is upon us, we're now going through a build-up period, and we're looking forward to continue the flow test when the dry season kicks in sometime April, May next year. So it's the first for Australia to get gas flowing from a shale formation, from a horizontal hydraulically fracked well. So we're proud of that. We think it's a great achievement from the company. Now this is a seismic photo, and I just want to point out a couple of small things. The two blue lines indicate the wells that we've drilled. The one on the left is AJQ 2, the one I was talking about a minute ago. And that was drilled what we call on structure. So it's basically drilled into a dome where the gas could be trapped. And that's all good, and we found lots of gas, but it's important for us to also be able to find gas in what we call an off-structure situation. So there's no dome to kind of capture the gas. And that's what that blue line on the right-hand side shows. We also penetrated the underlying Riversley Formation. It's also a shale formation, and when you talk to some of the experts and you show them all these technical logs and all the surveys that were run, people will say, from a technical shale parameter perspective, it doesn't get any better than that. So it's really something that we can't wait to drill more wells into, and to do a production test as well. So we just drilled the vertical well this time. But one of the major points is that we found gas off structure. So we don't need the dome or the trap to actually to be able to find gas. There's gas off structure, which is a major plus because the majority of that large area is actually off structure. So again, a key technical success for us that we managed to achieve this year. So that's Queensland, very large asset base, and a lot of stuff to get after. I should have also said that 7 wells have now been drilled in that tenement, and all 7, and not all of those were drilled by us, have found gas. Yeah, so it's a 100% strike rate. Now going to the Northern Territory, really interesting place, very supportive government. The government certainly wants to, get the industry on the road, and a lot of companies have moved in, companies like ourselves, but also you see some of the major companies now moving in. So Statoil has taken a position in the Northern Territory. That's a major European oil and gas company from Norway. Total has taken a position. Santos is there now, they're active. So there's a lot of activity, and we can really see it's got all the characteristics of a new major oil and gas province in Australia. We believe the MacArthur Basin, where we operate, and we are all, the bits in blue, that's dark blue, that's Armour. So you can see how prominent our position is there. We believe the MacArthur Basin is liquid rich. Yeah, so there's liquids and gas to get after. Now it's again, we only started exploring in that area over the last couple of years, but others have been there before us, and they found oil and gas whilst they were, looking for zinc. Yeah, so it's there's definitely petroleum there. They're proven petroleum systems. Here's a picture of one of our discoveries called Glide 1. This gas we found at a depth of about 600 meters below the surface. Now that's very shallow. We didn't have to stimulate the well. So that's the kind of flame we were getting from a depth of 600 meters below the surface. That's the equivalent of at least 3 million scuffs a day. So for us, it's now all about chasing those targets, and it's relatively close to the pipeline that goes into the MacArthur River mine. So it's just a matter of hooking all that gas up to that pipeline, and off we go. So that discovery there. It's from a conventional type reservoir, which we call the Coxco Dolomite, which is actually at the base of a much larger shale formation called the Barney Creek. And it's all along what we call the Emu Fold. So you can see that on the right-hand side on that picture, you see that fold going from the bottom right to the top left. So all the yellow areas are conventional targets that we're planning to get after, and looking for similar results as we saw with the Glide 1 discovery. Now overlying that is the Barney Creek Shale, which we believe, and that's been externally verified, it's got 18 TCF of prospective resource. So again, a very, very large amount of gas that we're trying to get after. At the moment, this year we drilled Myrtle Basin 1, which we want to go back to next year. The reservoir is actually deeper than we were expecting, which is good news because the deeper it is, normally the higher the pressure is, and therefore the more gas you'll find. Lamont Pass 3, we found 500 meters of oil shows. So, whilst it still remains to be seen whether that oil can be commercially produced, to have found 500 meters of oil shows is a great result, and it really puts us in a really good position to explore those liquids further and see if we can commercialize it over the coming years. So it's all, we're excited about all this stuff, and it's great to see these encouraging results. Then moving on to Victoria, we've got a 51% interest in PEP 169, which is around the Otway area, and we're planning to drill a well there with lake soil in the first quarter next year. On that photo there you can see the proposed well site for Otway 1, and in the background there, which really isn't very far away, you can see the gas plant that's being run by Origin. So if we are successful with this exploration well, and if it does produce gas, then all we do is run a quick gas line into that gas plant, and we'd be selling gas. You don't need any compression, just low pressure gas into the gas plant, and off we go. So it's a priority for us because we think it's important to get some cash coming in. It's not going to be tens of millions per year, but it's great to have a start and to see some cash flow coming into the company. So if all goes according to plan, around certainly by the third quarter next year, we should be seeing gas coming from there. There's another 2 areas, PEP 166, where we've got an interest as well, and there's a very prospective area, PRL 2, where we've got a number of options to get into as well. So it's whilst it is much smaller than what we have in the Northern Territory and Queensland, potentially it could be we could create a lot of value from these tenements as well. I would just wanted to kind of close off with the Queensland gas markets, and I think it's well known now that there's a lot of let's say uncertainty around, or there's basically the East Coast is facing a significant shortfall. What you see there on the left-hand side is the evolution of the reserves in Queensland, and you can see how that has plateaued. And that's all from coal seam gas. These are what we call 2P reserves, and 2P means probable reserves. So it doesn't mean proven reserves, it's probable reserves. So this is information from the government, and overall, the realization is that there's a shortage of about 10 to 15 TCF going forward in Queensland. Now, we'd love to be part of the solution. We're sitting on top of a major gas resource, and we could be a big part of the solution here. So we're looking forward to playing that role. On that, we are open to partnerships for selected tenements that we've got. All of our tenements are still owned 100% by Armour. So all 17 tenements in the Northern Territory and Queensland. And we're open to partnership for either one or more of our Northern Territory tenements and or the Queensland tenement. So we see that as an effective way to fund the business, and also by the time you get into major developments, we simply don't have the balance sheet to finance that ourselves. So a strong partner coming in, I think, will be a very good thing for the company from that perspective as well. So we're working on that as we speak. So here's my last slide. Why would you invest in Armour? We're a company with an enterprise value of around $50 million. It's whilst there's absolutely massive potential, this company could easily become bigger than Armour Energy if we are successful with our exploration and appraisal work. And I can certainly say that we're encouraged by what we've seen so far, and we're very confident that we'll have more positive results next year. So we're 100% owned. We've got this first mover advantage in multiple basins, and again, they're proven petroleum systems. So credit to Nick Mather, who's on our board, for having pegged the land when he did. I mean, we're now getting all the benefits from that. And when you look at it, on the east coast of Australia, it really is one of the few real sizable opportunities for new sources of gas supply. And the gas is needed. You know, we know about the shortfall or the projected shortfall in Eastern Australia. Here is a very large source of new gas that's available. And then again, I guess last but not least, it's a very experienced board. It's a very driven board. Very hungry to be successful again after all the successes that they've had so far. So they've got a very strong track record. And I'm very proud of the team that we've got at Armour as well, both from a technical and a commercial perspective. It's a nimble team, but it's amazing how much output you can create with a small team where people are really, you know, qualified and know exactly what they're doing. So we're very much looking forward to next year's plan. We're developing those plans as we speak, but we're certainly looking at an aggressive campaign in both the territory and in Queensland, in combination with that well in Victoria that I talked about. So on that, I would like to thank you for your attention today, and I look forward to chat further during the evening. Thank you very much.